Good afternoon, everyone. It's Chrissy from Solstice ATR. You can find me on the web under Solstice ATR, on Twitter under Chrissy Farah, Instagram under Farah9054, on Discord, Zuzu pound 9345. We use adaptive algorithm for either side market, up market, or down market. If you like this video, hit the thumbs up and subscribe for the YouTube channel for free. Remember, we're not a broker-dealer. Past performance doesn't indicate future results. Data may not be copied unless requested, and check the website policy, and you can reach us as well. What's the phone number? Let's first of all take a look at the overall market this week. And what I'd like to cover is basically the breakdown of a couple of equities all together combined, couple of ETFs at the same time, ARC management, and the overall breadth and the distribution of the ticks in relationship to the flip in the market. 92% of Friday's action was to the upside. Does this mean we can continue higher or get another 7-8% decline further in the stock market? I don't want to scare anybody. We have to be flexible and open mind to either side. And let's get started by the second slide. And what I want to do with this slide, slow it down, take a snapshot of it. Have an open mind on the overall market. Be flexible. Don't get stuck with your ego because it can hurt you, because the machines are terminators. They can come on either side, to the bull side or the bearish side, and take away your money. Be flexible. Understand what the outcome is and break each chart step by step without having an opinion or an overall. And don't listen to the box in the news. We know we have inflation, we have interest rates, we have Ukraine, Russia, prices of crude, gold, crypto, Bitcoin, and all of that. But I want you to have an open mind whenever you trade, when you put money on the line. Last but not least, this is the prior 3 weeks ago on April 29th. I put the tick distribution as well as the breadth of the NYSE and the NASD, and I showed the negativity in relationship to the overall market. And we can see that the distribution was below 1,000 most of the days. We had two spikes up, what that was that Monday, and another spike on Thursday, and eventually we continued lower. Ever since then, we got very sharp decline on Friday, and we continued lower. So let's take a look at what this week's, how it was in relationship to the prior 3 weeks. We know we were selling off on Monday. Tuesday, we tried to sell off. We tried to rally a little bit. Monday, we tried to push up and eventually got distribution. Thursday, we tried to push up and sold off. And eventually on Friday, we tried to hold into the gap. We pushed higher, sold off a little bit during the lunch period, and on Friday afternoon, they brought the market back up. Does this mean we can continue higher? Because the ascending ratio on the combination of the NYSE and ASD, we can see that the ascending ratio was 11.3%. 90% of it was to the upside. Does this mean we can reverse and continue higher? We have to be open-minded to what the market offers us, because there still be some bears out there in the market trying to sell it, as well as the algorithm. So last but not least, I want you to take a look at our website. If you need any assistance or any help, you can contact us by checking the website as well as the phone number. Let's first of all take a look at the SPX, which is the index, the Fortune 500, or we can look at the SPY, which is the ETF, or the E-mini or the micro E-mini in the Fortune 500. This is the March low. You can see where it is, March 1st. This is the March 22nd of 2021. We know the low was 38.5350, and on Thursday the low was at 38.58.87, which we tapped into and came back in relationship to the pushback higher on Friday, but we closed on March not the 29th, we can come up to the April area, and we are inside that consolidation as well as the May in this candle, but we closed right on that linear regression downtrend, but we still had that uptrend here, which we lost and have not been able to take back the 50 simple moving average, the 18, or the fast one up here. We below the 89 EMA. We tapped into the 116 SMA and got a nice rebound. We still have the 200 here. Does this mean that we are still in a downtrend from the January 4th of 2021? Yes, we are in that downtrend. We lost that symmetrical triangle and we fell further down in that open cone, but we are holding the Friday's range. Does this mean we can continue higher or not? It is possible, but we have to pay attention to the overall market. What I want to do is go over, I'm going to combine AAPL plus Amazon plus Google plus Microsoft. Last, we'll put Tesla on the chart, combining those 5 equities together. And what I wanted to do is show you that from the March low, we can see where we were in relationship to the November 11/22, the high. Then we fell down, and if you can see where we closed at, if you look at the close on the combination of those 5 instruments, it was 5,759.3 cents. If I look at the March low, we are right just in that area, slightly above the low of that candle. But let's consider if the things are going to turn around. We are away from the 116 SMA and the backside of this down channel. If I draw a channel myself from this point to this signal alert or the pivot where it rebounded from, we are a little bit underneath it. Does this mean we can continue back up? We have to have an open mind if we do not lose the March. And we have a lot of consolidation here, which I marked on the chart in the PowerPoint, showing this is a lot of consolidation before the move higher, retest, and continue up. Does this mean we find support in this area, middle of the range, above the top area, below the bottom of this range, before the breakout? Because this was the February 19 dump to March 23rd. Then eventually in April, as of May 2020, we broke out of the COVID situation, rallied up, consolidated for a couple of months, and we continued higher on the part of the tech sector. So pay attention to the QQQ in relationship to the NASDAQ or the NDX. And I will show the NDX where it is $NDX. Oops, it's NDX, I'm sorry. On TOS, it's NDX direct. So we can see that the annual prior high that I put here on the chart, when we went from the March low to the December high the prior year, you can see we tested the golden ratio 61.8 and fell back down. What I want to do is get rid of this fib so you guys can see it. And this is why I put it up on there, remove the drawing. What we're going to do is get a Fibonacci. And we're going to grab the March low. You can see the January, this is the December, the January was higher, January 4th, but the March low was here in relationship to where the annual high was created on 11/22 in the QQQ. We tested that March low, but we closed it slightly above the March, which is the 12,208.39. But we know we are in a downtrend. We can see this point and this point. That's a control point. And what I want to do is grab a channel mathematically from control point to the control point or a pivot. And we can see we just closed slightly right above it in this upper channel. Does this mean we can clear the 116 SMA? We have to have an open mind because the prior month was a rally up. Last month, which is this month, we fell off for 4 weeks in a row. We can see 1, 2, 3, 4, 5. And this is the 6th week trying to recover back up. We got 2 inverted hammers in relationship to the prior week. Does this mean we're going to get consolidation before a breakout or continue further to the 200 SMA and find consolidation in the NASDAQ where it was happening in September, October, November before the rally out, the retest in March and continue higher? So pay attention to the NASDAQ. Let's take a look at the ETFs one by one. And what I want to do is look at the TNX, which is the bond market, the 10-year notes. We can see we looked above, we broke that channel on this chart. You can see it comes from 116 of 2000 till the 2018. And this is the first time we broke above an interest rate bearing account. That means the interest rates are starting to come up. If the Federal Reserve Board going to stabilize and not push any more interest rates, we have to pay attention to this candle where it is the annual Fibonacci. You can see this is from 416.97 till 316 of 2020, the high and low, and you tested the 38.2, looked above it, came back to close just slightly above it. Pay attention in case it falls back in, because I had marked the 18 simple moving average and the 38. This was supposed to be resistance, but what I did, I looked above, and this week we came back in the TNX. Let's take a look at the IEF, which is, oops, I'm making these errors all the time. IEF, we can see this is the bond market. This is the 7 and 10-year bonds. We eventually fell from the par value, coming back below that channel. You can see this channel is coming from 616.07 till 10/16/2018. We eventually broke below it. We tested the golden ratio 161 as well as the 50 Fibonacci on the chart, and we reversed back up. Does this mean it can continue to come back to the backside of the 105? We have to pay attention to what the bond market and interest rates does in relationship to what the Feds are telling us, okay? Let's take a look at the other 5 ETFs, and what I want to do is put them all together. NYI New York Composite, plus we're going to put the XLK, which is the tech sector 100, plus the XLP consumer staples and products, and the XVG growth, as well as the plus XLV, which is the healthcare sector. And I'm putting them all together. Let's see if they can do this. Or we can take the XVG out of the way and push this on. And we can see we pushed up in February. That was the COVID. Then we fell down into March 23rd. We continued high, and eventually we got this professional gap. You can see here happened on 11/2 till 11/9. We never retested it. We continued higher, and we broke out the January 4th from the January 4th, 2021. We continued up. We consolidated for a while on the combination of those sectors, but in the last 4 weeks, we fell down and we reversed on the 116 simple moving average. And you can see that control point, we are right above it, but we are underneath the combination of those ETFs at the 15,909. Does this mean it's going to continue back to come back, retest the 89 EMA, the 18 and the 50? Remember, the 18 and the 50 are above. We are holding the 116, and the 200 SMA is below, and the 250. Does this mean it found support in this area, or are we going to look back in this area where we got the breakout before continuing high? Because if I take this candle down here, you see where the low is in the January. But if I come back to this consolidation, we tested this area, we tested the March, we tested the March 22nd, and we closed right above it in the range of the April area. Does this mean we can find consolidation in this area to continue higher or not? We got to be open minded to what the market is offering us. I hope this was helpful, and let's go take a look at some BTCs and some equities at the same time, and some futures at the end. What I'm going to do is start with /BTC, which is the pure contract for the future Bitcoin. We can see we filled a portion of this gap. I had a little box. What I did, I extended it because it never touched 100% of that gap. There's one more little gap down here. I left it alone. On the daily, it shows it. You can see all the gaps I've had. They are all filled. We looked up, we double topped, and eventually we lost the 67,900 that I called in November, and I called this in April at the same time. We fell back down to the 30,000. We looked up, we fell back in. I'm going to zoom in this area so everybody can see what I'm looking at. This is the professional gap that I consider. We tested the annual low. This is the annual high for the year of 2021. We fell back in the range. We couldn't hold the 47,215. You can see it there. That's the 50,000. And I eventually called, hey, be careful of the 47,215. And everybody looked at me like, you're crazy. What are you talking about? Then we couldn't go back and reclaim this area here. We fell further down. We have a professional gap up here. We broke through the 116 SMA. We broke through the channel with this linear regression channel going up. This is coming from 3/14/2020 to 9/23/2020. And this is the first time we tested. We looked below, tested the backside of the cone, which you can see that those control points or pivots, and coming back up. We have to pay attention to the 32,900 area or 32,855. If BTC can clear the 116 SMA and clear this gap in order to continue to the backside of that uptrend. And this is the monthly Fibonacci's that I had, which is the golden ratio 61. If I duplicated the monthly measured move, the 100%, we tested actually almost the 100% of it. We tested the 78.2 and reversed back above the 61.8 from the zero line. That's considered like a midpoint. Does this mean it's going to continue to back to the oval to fill the gap, BTC? If it does, that would be great. And that means it found support on the backside of this linear regression. And I had this oval here. You can see I put these ovals here for the sentiment in case things do change in BTC. I'm not going to cover Ethereum. You can look at it similar format. But remember, these are the things you have to pay attention to. Let's take a look at GC, which is the gold sector. GC, you can see on the annual chart, we had that linear regression downtrend on the weeklies, and eventually we consolidated, broke up because of the Russia-Ukraine area. We went above the annual Fibonacci. We looked at the golden ratio 38.2, which is a double top, fell back in, and ever since then, the monthly measured move was up here to 100%. And you can see we fell through the zero line and the 50 and eventually fell to the backside of this uptrend that we broke out of here. You can see that yellow line coming from 11/16/2021 to 8/8/20, and eventually we broke up. We came back, retested it, and at the same time we broke through that shorter distance from the annual high. You can see that control point. We fell below it, but we came back to the symmetrical triangle, the backside of the 3/16/2020 to 8/9/2021. We tested it, which is a very important area, and we pushed above on Friday. In order for gold to continue higher, we have to pay attention to this channel. If not, it will come back all the way to the backside of the support where the consolidation was from this area. You can see it once, twice, 3 times. If it cannot hold the support, 100% of the move will be back in gold to the 1680. If gold finds support at the 1780 area and reverses back of 1765, because this has a lot of consolidation here, a lot of volume in this area below the 50. Can it clear the 50 to continue higher, or does it fall further down? Pay attention to GC, see what the outlook is. Let's take a look at CL crude oil. Crude oil was a lot tougher this week on a lot of the traders because the consolidation coming to the 100% breakout. You can see that it was my annual fib. If I duplicate it, we tested the 100%, and eventually that was my measured move on the golden ratio on the Ukraine-Russia. We pushed to the 161, eventually fell back in the range, keep testing the 50% monthly and pushing higher because the sentiment is higher. You can see you had 2 push higher and the hammer basically closed inside the prior week's close of the week before. Does this mean it's going to continue higher? If not, pay attention to the monthly, the weekly, the annual chart, 61.8. If it's going to lose it to come back to the backside, or in order to continue higher, pay attention to the prices of crude. Remember, the Biden administration does not like crude. They don't want to open up the pipes. They want to keep prices elevated because they are pushing the electrical cars where they get their supply still from gas. I'm sorry, this is reality. Most people don't recognize it till later. And the cost of an EV, such as a Tesla, let's say 50,000 to 60,000 average car from a BMW or a General Motor $40,000-$50,000 car, you still have to charge it. It's going to cost you money. Looking at it in a 3-year or 5-year cycle, that car cost, you're not saving it in gas, okay? So just be aware of it. Let's go now, take a look at the ES. I'm going to use the micro ES. And the micro ES, you can see where we tested the 116 SMA. We tested this consolidation in March. Does this mean it can hold this January low, February, before continuing higher? We have to pay attention to it because you came back 1/3 of the move. This doesn't have fibs. Let's take a look at the micro NQ. And you can see the micro NQ in the last couple of weeks, the tech sector. You can see those stocks that are put. We fell further down. We got a reversal in the hammer. If I connect this point to this point, you can see we just closed slightly above it. Does this mean it pushes above the 116, the backside of the 12,940, 175 in order to continue higher or not? Pay attention to what the NASDAQ offers you. Let's take a look at the RTY, the small cap, the micro. We'll do the micro or the IWM, micro 2K. And you can see that the micro TK for a year, it was consolidating. That was the November high. We fell back down. We retested this green box. This green box is an ADX DMI crossing. When the RSI gets too extended, it pushes higher and pushed it quite a bit. That push higher, we consolidated, we fell back and retested this candle. You can see on this push down here, if I put my mouse, you tested the February area before the push down in March, then reverse and break out in November 9th of 2020 to close the December high. You can see that this candle, this is the candle in December. This is the second week, third week, and this was the fourth week. This was the January 4th. Look above, we fell below it. In order to reclaim this area, we need to get back around the 1910, 1925 in the Russell and the 116 SMA. At the same time, we have to pay attention to this consolidation in this area and the breakout if the Russell tends to reverse back in that linear downtrend. Let's take a look at the Dow Jones Industrial Micro YM, and I'll go back to the ES. You can see we retested the 116 SMA. We are holding the March consolidation. Does this mean we can hold the March low, or do they want the February, January low of this area before coming back up in that linear regression down channel? Let's go look at the ES a little bit more in detail. I'm going to go back to the original ES. And what I want to do, you can see my annual Fibonacci's where they are in relationship to the uptrend. We lost it. We were trying to break out the month before. You can see that push up in March. In April, couldn't hold it. We fell back down. We had an inverted hammer in May, and this is an inverted second week hammer back up. Do we end up closing right above this uptrend that we broke out of in order to continue back up to the 50 Fibonacci and the 61.8, or do we find resistance at the 4100? 4023 is a mental number. Do we end up going above it or not? And what I want to do, you can see here where the May was, it's the low of it was 4029.25, and you can see this one from April was 4021. We closed a little bit under it, and we can see this is the breakout in March where we tested it, broke up, Here we looked into it and came back up, and look where we stopped right on the March 22nd low and reversed on the 116 simple moving average. Does this 116 catch up, hold us in this consolidation before the reverse up, or do we fall to the backside of the golden ratio 161 and the January-February consolidation of the 2020? Trade what you see, not what you think. Don't have a biased opinion, and we're here to help you. Take care. Over and out.